Materials sector implodes, down 1.02% this week, with bearish trend intact, driven by oversupply risks. This is what every serious investor needs to know about materials right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we begin this new week of trading, the overall market context is one of normal conditions, with the VIX at 19.6, indicating a moderate level of risk. This week, the materials sector is underperforming the S&P 500, with the sector ETF, XLB, showing a decline of 1.02%. Despite this short-term weakness, the materials sector deserves attention right now, given its significant role in the global economy and its potential for long-term growth. As a key component of the industrial supply chain, materials companies are critical to the production of goods and infrastructure development. With the current market regime favorable for cyclical sectors, it is essential to examine the trends and patterns in the materials space. This sector's performance can provide valuable insights into the overall health of the economy and its potential for growth. Let us start with the technical picture and what the charts are telling us. The materials sector, as represented by the XLB ETF, has experienced a decline of 1.02% over the past week and 3.4% over the past month, reflecting a bearish sentiment. The Relative Strength Index, or RSI, is currently at 41, which suggests that the sector is in a state of oversold momentum, implying that the recent downturn may be due for a pause or potential reversal. This RSI reading indicates a lack of conviction among buyers, leading to a bearish signal. The trend direction is clearly downward, with key support levels likely to be tested in the near term. Resistance levels, on the other hand, may cap any potential bounce, leading to a period of consolidation. The current move does not appear to be a sustainable breakout, but rather an extended overreach to the downside. A specific technical setup worth watching this week is the potential for a bounce-off support, which could lead to a short-term consolidation phase. The sector's momentum is clearly to the downside, and it remains to be seen whether this can be reversed. Now let us look at the fundamental catalysts driving this sector. The materials sector is poised for an interesting week, with key stocks such as LAN, SHW, FCX, NAM, and APD serving as bellwethers for sector health. From a macro perspective, normal conditions prevail, with the VIX at 19.6, indicating a relatively stable market environment. This week, general macro conditions will be the primary driver of sector performance, with economic data releases and overall market sentiment influencing the materials space. Please keep in mind that this is educational content and not financial advice. Looking at the key stocks, we see a mixed bag, with some names outperforming and others lagging, which could be indicative of a sector in transition. Earnings reports from major players will be closely watched, as will regulatory news and macro data, such as industrial production and construction spending, which could provide insight into the sector's underlying fundamentals. The longer-term thesis for the materials sector remains intact, driven by steady demand for commodities and construction materials, which is likely to support the sector's growth trajectory. As we navigate the materials sector this week, it is essential to consider the macro tailwinds and headwinds that could impact performance. With a stable market regime in place, the sector's performance will be largely driven by company-specific news and broader economic trends. Next, let us talk about the specific risks you need to manage this week. Risks are elevated in the materials sector this week, primarily driven by supply chain disruptions, commodity price fluctuations, and geopolitical tensions. These factors could lead to significant price movements, making risk management a key consideration for investors. Given the current volatility environment, with the VIX at 19.6, position sizing should be carefully calibrated to balance potential upside with downside protection. Unexpected headwinds, such as trade policy changes or natural disasters, could further exacerbate volatility. A disciplined framework for managing downside exposure involves setting clear stop-loss levels, diversifying across subsectors, and maintaining a cash allocation to capitalize on potential buying opportunities. By adopting a prudent approach to risk management, investors can navigate the current landscape with greater confidence. And now for the strategic outlook, where does materials stand heading into next week? For the materials sector this week, we maintain a cautious stance due to market volatility, with a key theme being the ongoing supply chain disruptions. This is educational content and not financial advice. Consider liking, subscribing to Financial Market Oracle, and commenting your materials watchlist below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.